and welcome everyone. I'm Tom Bowley, Chief Market Strategist at earningsbeats.com, and this is Trading Places Live. It is Wednesday, July 22nd, 2020, and I am pre-recording this Trading Places Live for Thursday, July 23rd. Futures are slightly higher for Thursday after another strong session on Wednesday. We saw the Dow Jones move back above 27,000, and the S&P 500 stretched its recent winning streak. So some pretty good action in the market. We're going to get into all that in just a minute. As far as the agenda goes today, we will take a look at the daily market recap to start. Then we'll get into the talking technically. One of the things I wanted to look at today was relative strength. That's a main topic for me, especially as we go through earnings season. Just trying to take a look to see what is leading. I think you'll be surprised. A lot of laggards actually were leading the market on Wednesday. Then we're going to get into a segment I enjoy doing, Anatomy of a Trade. So I'm going to walk you through some actual trades I have or had, and also a couple of trades I'm stalking right now and I'm thinking about. Then we'll get into the earnings spotlight. Of course, a lot of big earnings reports out. We'll talk a little bit about Microsoft and Tesla, which came out after the close. And then we'll wrap up the show with 3 you must see. Got a few stocks I think you're going to find very interesting, all 3 breakouts today. All right, before we get into all of that, I do want to just invite all of you, if you have not already signed up, we'd love to have you over at Earnings Beats. You can subscribe to our free Earnings Beats Digest newsletter. It comes out Mondays, Wednesdays, and Fridays. All you need to do is type in your name, email address, hit the subscribe button. There's no credit card. You can unsubscribe at any time, no problem. But I think it will give you some insight as to how we approach the market. Very educational. And I think you also find some trading ideas along the way. All right, let's move on and see what happened on Wednesday. Well, you can see the Dow Jones. There it is, 27,005, back above 27,000. We haven't cleared that June high yet. We still got a little ways to go, probably another 2% or so to get there. But getting back above 27,000 was nice. S&P 500 continued its winning streak. Remember, we broke through 3232. So far, pullbacks really haven't even gotten close to that level just yet. And we continue trending higher. I think the S&P looks really good. NASDAQ on a relative basis underperformed today. I think we're probably, well, we'll see what happens tomorrow with Tesla and Microsoft and Chipotle and some other earnings reports out. But the NASDAQ, you can see, really been in a nice uptrend now for several months, outperforming all of the major indices over that period. But we did see a little bit of underperformance on Wednesday. The mid caps and the small caps both up, but you know, you can look across the board. Actually, all of our major sectors were up, anywhere from the small caps 0.15% to the mid caps 0.76%. So all fractionally higher, but still up is up. Market continues to be strong. From a sector perspective, utilities led, along with real estate, materials, healthcare. Where's technology? Where's consumer discretionary? Where's communication services? Nowhere to be found. So this was what I was talking about just a couple of minutes ago. I think the leadership in this advance was definitely different today. Not that that's a bad thing. I really like it when all the markets are participating, all parts of the market. And that's what we're really seeing. So got some really good action going there. Energy, after a huge day on Tuesday, did pull back. It was the only sector that was down on Wednesday. It was down 1.23%. Still got some work to do getting back through the 50-day moving average and still well off that June high that we saw. So energy, airlines, banks, these are some of the areas that just haven't been able to get back up to that June high or even close to it. And yet you can see the S&P's above it. The Dow's almost there. NASDAQ's crushed it. Small caps and mid caps still struggling, but they're making their way back toward it as well. Energy, airlines, banks, those are a few of the areas, some areas of the REITs really struggling to get back up above that earlier June high or even to test it. All right, 10-year Treasury yield. Looking ahead on Thursday, economic reports due out, initial jobless claims at 8:30. 1.3 million, a little over 1.3 million, 1,308,000 claims is the estimate last week was 1,300,000. So just a slight tick higher is expected tomorrow morning. June leading indicators will be out at 10 a.m. The estimate is 2.5%. May was 2.8%. So we're looking for a little bit of a pullback there in the leading indicators, but still positive. Taking a look at the 10-year Treasury yield, and this is, a little bit of a problem. I mentioned the banks, and one problem with the banks is when the yields are falling, it's just not a great environment for the banks, and so they're struggling to keep up with the overall market. In fact, on a relative basis, banks have been pretty poor, and this is the reason why. If we want to take a look, we can pull this up. Just go down to the price indicator, and you can put in dollar DJUSBK, which is the bank index. Make it relative to the S&P 500. I always like relative charts to be on a line chart as opposed to a candlestick chart. And then we'll pull it up, and you can see what's been happening. I mean, as this yield has been moving lower, you can see what's going on with the banks relative to the S&P 500. I mean, the chart almost looks identical. So we've really got to see that yield begin to pick back up to the upside. And if we do, then I think maybe we'll see a little bit of short-term relative strength in the banks. All right, let's keep moving on. How about we move into talking technically? I want to get into relative strength. I have a relative strength industry group chart list, and I always pull it up in summary form every day. It just quickly gives me an indication of what's leading. So I can see home construction. We actually had some economic reports out on housing on Wednesday that were not very good. I mean, the numbers came in lower than expected, but home builders just ignored the news and put its head down and had a huge day relative to the S&P. Now, when we look at the chart, this is a 3-year weekly relative chart. So this is telling us that home construction is outperforming the S&P 500. And it's also telling us now that the relative PPO has gone positive, which is a very, very good thing. When I look at the absolute chart, which I have on the bottom of all these charts, you can see we've been moving straight up. Now, we haven't cleared the February high. And so on a relative basis, that's why, the PPO's just gone positive on this relative strength. I mean, this isn't like broadline retail or the autos with Tesla, where, things have just been going crazy for a while. And I can show you, for instance, let me see if I can find the autos. There we go. So on the autos, you see how this has been going for a while. Look at the absolute strength. See how we broke out above that February high long ago, 120 points ago? That's resulted in tremendous relative strength in the autos. And you can see the difference. Look at the relative PPO. This is one of the highest relative PPOs I think I've seen. That just tells us how much automobiles have been outperforming the S&P, and a lot of it has been because of the huge move we've seen in Tesla. All right, but let's focus on some of these other groups that were leading on Wednesday. Defense stocks. Look at the relative weakness that we've seen in defense throughout this pandemic. Started to bounce back. Now, is this a healthy group? No. Is it starting to try to participate with the rest of the market? Yes, but look how far we are below that February high. We've still got 120 points to go to get back to that high. I think we were just saying that autos have already broken out by 120 points. Here we've got a group that's 120 points shy, but it was a leader on Wednesday. Same goes for furnishings. Furnishings been in a downtrend. Came up, tested that relative 20-week moving average, rolled back over again. You can see the relative PPO still weak. It's improved, but it's still below the center line. Any recording or any of these relative strength charts that show relative PPO below the center line, I'm not going to be that interested in. As I get closer and closer to the zero line, I will be considering them, but I don't really, I'm looking for relative strength, and I don't want just something that's going to last for a couple of days or a week or maybe 2 or 3 weeks. I want to know that I've got a group that's got a good chance to lead for a while. And so when you're looking at this, you need to keep that in mind. And so when you look at all of these that I'm pulling up right now, look at the mortgage finance relative to the S&P 500. Huge drop back in March. Yeah, we had a little bit of strength here. Looks like a couple weeks. And then we rolled right back over. PPO, relative PPO, still very weak. What else led? Well, let's get into the REITs. Here's a residential REIT. Look at the relative weakness. Now, it led today, but on the week, it's still down. And you can see that the relative PPO just continues to accelerate to the downside. Restaurants starting to show a little bit of strength here in July, but still part of this downtrend. So you see all the leaders, and so this just gives you a sense of what took place on Wednesday. This was not the way we want to see it. We want to see those aggressive groups that have been leading the market outperforming. And right now they're just consolidating. So while they consolidate, the NASDAQ on a relative basis consolidates as well. Let's take a look maybe at a couple more of these. All right, you've got diversified REITs, another one. REITs taking a big dive there. Then we've got retail REITs looking at the same thing. And here's soft drinks. Look at soft drinks, how weak they've been. It really wasn't until we got down here to the autos. So home builders were starting to show some strength. Autos, I showed you strength. Here's home improvement. Home improvement did very well today. Continues to break out. Very strong PPO. So this is a group that I'm more interested in trading. This is a strength that I feel like I can count on. It's been a group that's been leading. I'm a momentum trader. I go with what's working. I try to stay away from what's not working. And I don't assume that just because we're seeing strength in some of these groups for the first time, in weeks, that all of a sudden this is going to be the new norm for the next 6 months. Probably not. Another one on the list here, you can see recreational products. This has been a very strong group. Look at the move off of the March low, relative strength. So we know the absolute strength is there, but this is relative strength up here. You want to beat the S&P 500, you need to know what areas are beating the S&P 500. And then look for stocks, leading stocks in those areas. All right, let's keep moving on. I want to move into anatomy of a trade. So anatomy of a trade, what I wanted to do is take a look at some areas of the market. I'm gonna show you a couple of trades. Actually, let me go back over here. Okay, so let's take a look first at big lots. Now, I wrote this article in Don't Ignore This Chart earlier this week. This was back on Monday. And I point this out because the stock came out with two different announcements this quarter raising guidance. And we saw one on the gap up here back at the beginning of June. You see the heavy volume. And then the second one came toward the end of June on very heavy volume. But I don't like to chase. And of course, if you had chased either one of these news announcements, you can see what would have happened afterwards. But what I do, and we just created a raised guidance chart list for our members, and Big Lots was on it. And this stock had come back down and was down at a pretty key area. And so I bought Big Lots down as it approached the 50-day moving average. And I posted this in the Don't Ignore This Chart blog so that you could get a sense of the type of research and type of strategy that we utilize to try to increase our reward, minimize our risk. So we're always looking for that solid reward to risk relationship or setup. And so Big Lots, I was looking for it to get back to 44. I thought that as it got down to the 50-day, we were probably had limited downside. You never know for sure. You got to keep your stops in play. But as it turns out, that turn right there, as it was just starting to turn back up, turned out to be a very good sign, because you can see the last few days, I actually took profits in Big Lots just because when I get a stock that's up, and I think I was up about 13% on it, 12 or 13% in just a few days, maybe 3 days. I like the stock. I think it's going to break out eventually, but it's very possible that it just goes up to 44 where it was before and comes back down and consolidates again. So there's no guarantee we're going to get the breakout in the short term. And I just don't like to look at a 12, 13% profit in a few days and ignore it. You know, if the stock were to just simply sideways consolidate, it could pull back to that 50-day again. And if it did, all the profits would be gone. So as a short-term trader, again, I like to capture profits as best I can. So that turned out to be very timely, and I was actually pretty happy that I was able to get that into the Don't Ignore This Chart blog before the move took place. Now, they don't all work out, and this is one that I actually bought and had to get out of yesterday or on Tuesday. So we had the breakout, and I was watching this bull flag. So we got a nice flagpole, sideways action flag, and do you see this move here? Volume started to tick higher on the 20th, which was Monday, and we made this breakout closing above these prior highs or prior high candle bodies. But we came back down. Actually, I wrote about this in the daily market report to our members when it was pulling back, and I think it was somewhere around 424, 425, something like that on this pullback after it had gone over 440. And I thought, okay, this, you know, looks like a nice breakout. Well, when it went back down and failed to hold this breakout level, I just took a small loss. So I was in somewhere around 420, I think, maybe a little higher than that, maybe 422, and ended up getting out of the stock near the close on Tuesday when it failed to hold this breakout level. Now, I don't know where it goes, still above the 20. It could take back off again. But one thing that bothers me, and you know, sometimes it's a good idea to take a look at the long-term picture of a chart. Look at this stock. It was at $40 back in 2011. It's now at $4. It's 90% off of its high from 9 years ago in a very strong bull market. I mean, the stock market's gone up a lot since 2011. So this has not been a great stock. Now, it's starting to show some nice strength, and maybe this is the start of one of these moves. It could very well be. But as a short-term trader, again, I don't want to get caught up in a stock that's been in a 9-year downtrend. It failed to hold the breakout level, so I decided to take a small loss and move on. Next stock. Now, this one actually I had also written about, and this was in my Trading Places blog. This was the article I wrote, Internet Stocks Remain Strong, and this one could explode higher. I am, at this point, kind of watching to see what GoDaddy does. I wrote about this one because off of this nice uptrend, huge uptrend, there was a negative divergence, which tells me we're probably going to see a little bit more extended weakness. A lot of times I look for the 50-day and I look for the centerline tests. We got both of those and actually went even lower. We went all the way back down here into this gap support, and I wouldn't be surprised to see this begin to turn back to the upside and maybe print a cup. So, but this is where raised guidance came in. So look at this buy on the rumor, and then when the news comes out, then the selling starts. This stock ran down $7.50 after the news came out of the raised guidance. And the market, you know, folks don't understand. They look at it and they think the market's rigged. It is to some extent in the short term. I mean, if GoDaddy keeps performing well and raises guidance and beats earnings estimates, stock's going to go higher in time. But in the short term, the market is inefficient. And so there are definitely some opportunities here that we have to be ready to capture. So I think GoDaddy, the aggressive place to enter is right here in the upper 60s. I really like this low, having been the low back around $68. We'll see. But that was a pretty big reversal. Nice reversing candle there, nice volume here. And, you know, maybe we go back down and we retest it. We'll see. But I think we're still right about that same price on this one. Yeah, we went up, hit the 20-day, and then came right back down again. So this one's still just a tad higher than where it was when I wrote about it. But I'm still looking for this move. And in order to get this move, you got to get back through the 20-day. So if you want to wait for some strength, you could wait to see if we get that move through the 20. All right, another stock that I really like, and I own this one at this point, is Helen of Troy. Here was the earnings report. Stock came out, gapped up, beat on the top line, beat on the bottom line. I thought it was a great report, but I don't like to chase. So that day after earnings, it came down and had about a low of around 192 or so. And as we went back up, couldn't get through 210, and we came right back down toward this 192 low. Actually, we've gone a little bit below it, testing the 20-day. I think when I talked about this one earlier in the week, or maybe last week, I was saying I wouldn't be surprised if the stock moved into the upper 180s. Well, today's low was 189.34, closed at 191.82. I wouldn't be surprised to see this one make another run right off the 20-day moving average. So, and I do own that, just full disclosure. All right, tell you what, let's go into earnings. I'm going to jump into the earnings spotlight. There are some earnings definitely we want to go over. Now, the first one that I want to talk about is Tesla. And if you're a member of Earnings Beats and you were at our Q2 earnings webinar back on Monday evening, you know that I gave you my top 5 picks going into earnings and counted them down from 5 to 1. And my number 1 pick for this quarter was Tesla. Stock had been running for the last few weeks, had made a huge move since the end of June. It was, 950 or something, 970 toward the end of June, and made a run to 1,800 in 2 weeks. And has since pulled back. Well, they came out and reported, and not a shocker, they blew estimates away. Easy beat on the top line revenues, easy beat on the bottom line. And now you've got Wall Street scrambling to try to figure out, okay, what is Tesla worth? Actually, I don't know that I'm going to be able to pull that up here because of the time, but I can tell you where Tesla is right now. So let me get that for you. But big beat, top and bottom line. Microsoft also had a big beat, top and bottom line, but Microsoft was selling off after the news. Tesla right now is up 4.4% after hours. It's up another $70. So it is at 1662.50 right now. So it is going to challenge the high candle bodies from back earlier in July. And if it gaps above that high candle body, which I believe was right here on July 13th of 1659. Right now we're trading after hours 1661. So we're $2 above that. If we open above it tomorrow and, buyers continue to pour in, this is a stock that could absolutely keep this run going. So I love Tesla. I've said it's one of my favorite stocks. I said back on May 19th when we put it into our model portfolio, it was one of our 10 favorite stocks. I went into the model portfolio. I said when it was at 800, I wouldn't be surprised if at the end of the quarter, Tesla was 1,600. We're already there. We still got another, almost 3 or 4 weeks to go before the end of our portfolio period. Those quarters run from May 19th to August 19th to November 19th to February 19th, and then back to May 19th. It's 90 days, 3 months, always on those dates. That's when we pick our stocks. But Tesla just blew the numbers away. Let me give you the actual numbers. So their revenues came in just a little above $6 billion. Market was expecting $5.31 billion. So an easy, 12% beat on revenues. The bottom line, the market was looking for a 49-cent loss. Tesla had profit of $2.18. That's why this stock has been doing what it's been doing. Wall Street knew it was coming. And so they've been buying. Yeah, there's been a ton of accumulation. Throw in the short sellers that have had to cover, and we've had a melt up. And I don't think it's over. All right, what other earnings reports do we have? How about CMG? CMG, another one of our stocks. Now, this one on Zacks showed a miss, but on briefing.com, they were showing pretty much just that they had matched estimates on the bottom line. Top line, they beat. So they did come in and beat revenues even through the pandemic. A restaurant, Chipotle, beat their revenue estimates. And so it's kind of up in the air whether or not they beat on the bottom line. Zach says no. Briefing.com says that they matched. So I guess you got to just pick your source. After hours, though, the stock last time I looked was down about 1.5%. I'm going to give you a couple others here that reported really good numbers and it's showing great results. One is BCOV, smaller company, Bright Cove. This is a stock actually that was not showing good strength. I would not have expected this out of the company. The only bright spot for this stock was that it's in software, and software has been a great area. But they blew the numbers away. It's a small company, but their revenues were about 48 million. Market was only expecting 44.9 million. 7-cent profit. Market was expecting a loss of 3 cents. Stock's up 21% after hours. So big move there in Bright Cove. Other stocks reporting great numbers and trading higher. Plexus, PLXS. Last time I looked, up over 9% after hours. Not only did they easily beat top and bottom line, but they guided Q4 revenues and earnings per share higher. And you can see this stock was pretty close to a 52-week high relative to its peers. So Wall Street was looking for a good report, and they got it. Another company that reported really strong results, Netgear, NTGR. This is a telecom equipment company. And the stock had just broken out recently. Look at this. Nice bottoming head and shoulders, reverse head and shoulders. Made the breakout. The stock is up 8%, almost 9% after hours. And look at the stock on a relative basis, breaking out to about an 8 or 9 month relative high to its peers before this earnings report. Looking good there. Let's do one more. EFX. EFX, you can see, actually was at a 52-week relative high to its peers back in the beginning of June. Since then, it's been consolidating and lost some of its relative strength, which is typical when you consolidate. But it came right back really to the double top breakout that it had back in June, and is now starting to trend higher. Well, it's going to be pushed along even faster. They easily beat their revenue estimates, easily beat earnings per share, and also raise their guidance. All right. One other stock, I won't show it, but MTH Meritage Homes. Mentioned home builders had a big day. Well, this stock blew out top line, bottom line numbers, and they guided Q3 revenues and earnings per share higher and fiscal year 20 revenues and earnings per share higher. And Meritage, MTH, up over 6% after hours. All right, let's move on to the three you must see. I'm going to start with GPI. And GPI, you can see here, did make the breakout on Wednesday. So a nice breakout here. Not only did it break out above this June high, but it also more than filled the gap. The gap that we saw back in March, the huge drop here, we went back, filled that gap, but couldn't get through it. Well, on Wednesday, we got through it. Volume picked up, very nice volume coming in, and it's in a good area of the market, specialty retailers. So if we get this relative breakout tomorrow, this is a stock I think that could really run. So GPI, I think, looks pretty good. VRAY, V-R-A-Y. This is ViewRay. And ViewRay just making a breakout above its recent highs here, but I like that volume. And the medical equipment group is broken out. This is a small company, but this is one that hasn't really run. So if you like smaller stocks, maybe this is one that you might want to keep an eye on, but really good action today. And then the last one I have for you is AMD. Advanced Micro, one of the best semiconductors out there, had been consolidating for a long time, and the relative strength deteriorated during that period. Big breakout on Wednesday, and I do own AMD. All right, that's it for today. I want to thank you all for tuning in and wish you a great rest of your week. And I'll be back over at Earnings Beats on Monday for your next Trading Places Live. Have a great day, everybody. Happy trading.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.